Hello, everyone. I can see people starting to join us. So I'll just give a couple of seconds for all of the Zoom stuff to start working. Yeah, I can see people coming in now, so it seems to be working. Welcome, everyone. Thank you for joining us today. Let me just check with the team. So we've got, that's it. So it looks like everyone should now be in. Everything seems to be working. Hopefully you can see and hear me and see the presentation. So thank you, everyone, for taking some time out to listen to us today. We've had to change the agenda very slightly because news seems to be very fast these days. Obviously, on Saturday, when they announced the unfortunately inevitable lockdown for England, which has started today, which means that we've all got nothing better to be doing right now, obviously, as we're all trapped. Although I think it's not as bad as lockdown version 2, and we're not quite as trapped as we were, but still, we've all got a lot of things to start contending with. So we've had to change very slightly what we're talking about. So please forgive us for going slightly off piece, but hopefully it's going to be information that's useful to you all. So we're going to run through a number of different subjects. If you come up with any questions as we're going through, there should be a question and answers box on the Zoom meeting. So if you open that up, put your question in there, and then we'll try and answer as many as we can at the end. But we're very strict on trying not to run over because we don't want to use up your precious time. So today, I also just want to say a special thank you to our sponsors. We're being sponsored by a group of people who were all involved with through various networking that we do. So we just want to give a shout out to them. So Express Van Centre, very kindly sponsoring us. They provide fleet MOT and repairs. They're based in Sittingbourne. I think they should be on the call. So if you want to put your details, Steve, for how to contact you, and all our other sponsors, if you want to put your details in the chat, say how you can be contacted, please do. We're also sponsored by Interpro Solutions, who provide interlocking floor, and they specialize in some flooring for garaging. I went on their website and they've got a picture of a Ferrari parked on a very impressive red and black checkered floor. So please do check Interpro Solutions out for that. And the final one is Sanford Hodges, is a health and safety specialist who at the moment I imagine is incredibly busy trying to keep all of the businesses of England COVID secure and safe, and make sure everything is all ticking along and able to carry on in business as much as we can. So if you've got any concerns with health and safety and things like that, then please do get in contact with them. So today, I'll be discussing a little bit about furlough, and I'll also go into a bit about break even. We've also got speakers we've got Gary from Plumwood and Peter Searle, who we've done many webinars before with, and we've also got Ricky Draper from Broadshaw Direct. I've actually known Ricky for a very long time. We've been working with Broadshaw for I cannot even remember how many years, longer than I think I've even been with the firm. So it's very good to have Ricky represent Broadshaw with us today. We've also got Emma hoping to attend us. She's held up at the moment, so it might be that I turn up instead of Emma. I do apologize if it ends up being me rather than Emma, as I know she's a lot better looking than me. So without further ado, let's have a talk about furlough. So I thought last month, hey, as the furlough specialist in the firm, I thought that's it, I've done my time, furlough's come to an end. Not to be, as Saturday, they gave the surprise announcement that furlough was being extended after Rishi Sunak saying, that's it, I'm not going to do furlough anymore. He had to turn around and say, okay, we're going to give furlough. So this means that once again, if you're not able to provide work for all of your staff, you can cut down on your wages costs of your business by furloughing some of those staff. The staff will then get paid 80% of their average gross pay, and the government will cover that 80% with a grant. The employer, however, has to pay employers' national insurance and employers' pension contributions on that gross pay. So there is a cost to the employer, but it's still a lot better than having to face redundancies and the horrors of that. The extension on Saturday was announced to last until the 2nd of December, although probably was actually intended for the end of November. But today they've announced that they're going to extend it all the way up to March. I did have an inkling that this was going to happen because the way that the guidance was written on Saturday, had a little line in it that said, oh, the November payments might be a bit late because we've got to get the system ready, but every payment after that will be on time. And I thought, well, hang on, you're only doing it for November. Clearly something else is afoot. And sure enough, it is. So what I think is going to happen is they're going to cover 80% of furloughed workers' wages up to the end of January. They're going to review the situation in January and then probably update February and March's amounts. So if there's not an imminent lockdown in February and March, then I should suspect they'll ease off the furlough just as they did in September and October, so reducing that percentage coverage. But we get to see exactly what will be the case. So for now, we can at least plan ahead to say, right, we can actually get up to the end of January with furloughing any staff that we may need to furlough because of the problems with actually going about doing our business. One of the other changes is this now includes employees who were paid up to the 30th of October. One of the things of the first system is if you'd taken a staff member on in February, you could furlough them in the scheme from March. If you'd taken on a staff member in March, they were not covered by furlough. This caused a lot of problems as people were at that point still in the normal run of things, and coronavirus was this thing in the ether that they were vaguely aware of. And so even us, we were recruiting at that point, and we had staff members who we knew we couldn't furlough. Well, now with the announcement on Saturday, they have said that as long as your payroll was submitted to HMRC by the end of the day on the 30th, anyone on that payroll run can be furloughed. And they've even gone further to say if someone was made redundant in September, they could also be included on the furloughed staff. They also are still allowing for flexi furlough. So the minimum furlough period is effectively a week, but within that week, they could do any amount of time where they are providing productive work compared to the time that they're actually furloughed for. You do need to make sure you have agreements in place with your staff to put them on furlough and set out the expectations for their flexi furlough. As I said, grant payments are likely to be delayed for November. Yes, so that's the news about furlough. They also gave out a couple of other bits. Local council grants, they're going to pay monthly based on if your business is required to close due to local restrictions. So whether that means you can't open because if you're in a regional lockdown tier 2 or 3, or whether you're in part of the national lockdown, councils will then start paying out a grant to those businesses affected. I think there's a flaw in it though, that you have to pay business rates in order to be entitled to it. I'm yet to see what the details are, but they're very much based on how much your business rates are as to how much you'll get paid. They're also extending the mortgage holidays for individuals, saying that this won't affect your credit rating. It will, however, affect anyone who's in a position where they're going to need to remortgage or get into a new mortgage deal anytime soon. You won't be able to do those sort of things whilst you're on a mortgage holiday, but there is that option if you're suffering from a reduced income. The 31st of January 2021 is when personal tax payments are all due, and they have given a system where if your tax bill is less than 30,000 on the 31st of January, then you can pay that in 12 monthly installments. We'll see what happens about that. There's a lot of people hoping that the 31st of January deadline will be extended, but I would say I very much doubt that. If anything, all of this increased funding out there means the government are more desperate than ever to get the tax paid, or at least know what the tax take will be for this year, well, for the tax year that ended in April this year. The other item is that self-employed grants. So they announced that the self-employed grant would be 55% of average earnings. That was updated today. So this slide actually has the wrong percentage on. It changed at lunchtime today to be 80%. So if you're self-employed, the grant that you got back in August for the first quarter of the self-employed version of furlough, they will pay exactly the same amount that you were entitled to then, capped at 7,500. I know that that system had flaws in it as well, and there are a lot of disenfranchised people who thought they could get earnings, and we've made lots of claims to try and get hold of grants that appeared to be within the guidance, and then it turned out they changed the guidance at the last minute to tighten it up. But if you've managed to get a grant previously, this means you've got another one coming your way. All you need to do is be able to evidence in some way that your way of working has been affected by COVID in some form. But it's certainly not as stringent as the furlough rules. And then the final thing is that the government-backed loans, so the CBILS loan and the bounce-back loan that are on offer to businesses have been extended again, and now the applications have to be in by the 31st of January. The bounce-back loan's a lot easier to get and is capped at 50,000. The Coronavirus Interruption Business Loan Scheme, the CBILS, I think that pays out up to £250,000, but it's a lot harder to get because you've got to jump through more hoops with proving the reasons that you need the money. Whereas the bounce back is just an online form, and it's a very quick process from what I understand. So those are the main announcements. Now, there's one thing that I wanted to go further and to talk about break even, because it's all very well having all of these tools at our fingertips, but knowing what tools are useful to use. And a lot of my clients at the moment are umming and ahhing about their staff base to say, have I got the right level of staffing? Do I need to actually make a harder decision and actually let people go? Which is obviously a very stressful decision and not something that anyone wants to do or take lightly. So the starting point for making that decision is to understand your business's break-even point. Now, as a business owner, I would always say you want to start with your business's break-even point isn't what it needs to make £0. It's what does it need to make to give you the income that you need. So the starting point is how much do you need to earn from your business? Now, what I'm going to do is go through this in a simplified way, but we often advise clients where we do a lot of calculations to work out this. So let's just say that as a business owner, we'll ignore salaries and say that you take all your income as dividends, just to keep the numbers simple. So let's say as a business owner, you need to draw 30,000 a year for your living costs. That means the business needs to make £30,000 of profit after tax. So if we assume that your business is a limited company, just again to keep the numbers simple, so tax in a limited company is 19%, so we can gross up that 30,000, and that tells me that before tax you need to make £37,037. 19% of that is the tax, 7,000. Take that off, you get your 30,000. So we can see how that works. So without looking at anything to do with the business itself, we can say actually your business needs to make 37 grand before tax each year for you to draw what you need to draw. And that gives us the break-even point for that business to say, this is what we're aiming for. Now, most businesses, they've got their overheads. In the past, what we would usually do is look at, say, 3 years overheads and say, right, let's add these together, take an average, and that's what your overheads would be for the business. But that's not going to be so accurate now, because you've probably crushed some of your overheads with the lockdown that went before, with the pressures that you're under. Cost saving has been a huge thing, and I've seen a lot of businesses become a lot more efficient in terms of their overheads. I've had businesses completely get rid of their offices and they're now fully remote working, which has significantly reduced their overheads. So it might be actually more useful to look at the last few months and then adjust that to come up with, this is what your annual overheads are likely to be. So let's just say, for simplicity, that they're 30,000 in this case. So that means that this business needs to make enough gross profit to cover the overheads of 30,000 and still make £37,000 profit before tax. So that means the gross profit has to be £67,000 in this case. And then we have to look at the margin that your business usually makes. Now, this is a complicated calculation for some businesses. Some businesses it's a bit easier. If you're operating on contracts and you have a set markup on those contracts and you're pretty good at sticking to those markups, then you can calculate your gross profit pretty easily and you'll have a fairly consistent gross profit margin. However, with the changes to the economy, with lockdown, with the restrictions, you might have a different product mix, a different service mix, and all of a sudden your gross profit margin will be different depending on what different things you're able to sell at this time. So having an idea of the sort of sales you're making, looking at the last few months might be a good indication, and then basing that on the historic data to come up with a good number. So let's just say you make 35% on your sales. Well, we can then apply that to that gross profit. And it tells me that if your business makes £191,000 of turnover, you'll have £124,000 cost of sale, which will then generate the £67,000 gross profit, which then we know is going to be enough to cover the overheads, the tax, and give you the amount you need to draw as your dividends. So that is your safety blanket. you know you need to hit £191,500 in a year and everything will be okay, assuming your gross profit margin can stay the same. Now we can take that a step further, and that is you can actually break that turnover down. So one of the things we usually do is break that down into a monthly figure. So we can say actually each month, this is the amount of turnover you need to make in order to break even. But monthly turnover can be quite variable depending on the seasonality of your business. And obviously right now, goodness knows what seasonality really means. But one of the other things we can do is work out an average daily turnover. So based on 191,500, there's roughly 261 working days in a year on average. So it depends on the days that your business is able to operate. Obviously retail might be slightly different. And this says actually this business here in our example needs to turn over £734 every day in order to have all the numbers work. And that's how you work out, right, am I safe to draw what I need to draw? Where the furlough comes in is you might then look at your overheads and say, actually, we're not going to be able to make that level of turnover. I need to save a certain value of overhead or a certain value of gross profit. And then use the furlough scheme to advise you on saying, well, actually, yes, if I were to save, say, £1,000 a month on this salary, then that would allow me to then break even again. And actually that person's work can be covered by this person, or maybe it's not important at the moment because we've got a reduced level of turnover. And this is how the break even calculation can lead into a way of working out advising how you go about the furlough. So I've whittled on long enough about furlough and break even. So to give you a break from that, I'm now going to pass over to Gary, who is going to talk to us about areas of compliance to do with vehicles transport. Gary, over to you.
Right, thank you. Hopefully you should see my screen coming up on the share. So let's talk about the perils and the pitfalls of operating commercial vehicles. Plumwood is a commercial vehicle compliance company. So we look after anybody who operates any large commercial vehicles over 3.5 ton. And this afternoon, I'm going to talk about some of the things that you might need to consider if you're operating those larger vehicles or even a van, and some of the problems that you can come across. Are your drivers legal? Can they actually drive that vehicle? Are your vehicles actually safe to use? And what people often forget is company reputation. You often have your name plastered down the side of the vehicle and phone number that has different uses. What really never ceases to amaze me is so many people will just drop a set of keys into somebody's hand, for a 10, 20, 30,000 pound van, truck or whatever, pat them on the back and wave them off down the road without doing any checks or looking to see even if they've got the right driving license. And you really should consider making sure that that person you're talking to does actually have the right license to go out in that vehicle. Nowadays, all we have is this plastic piece. People probably remember there used to be a piece of paper around that told what endorsements and what points you got on a license. And with a plastic license, you have to check it now online. It's always a good idea to just actually hold the license and look at it and make sure it's a real one and hasn't come out of the famous cornflake packet. But if the license is real and everything is in date, you can, of course, go online and check it against the DVLA website. And the driver can either give you a check code or you can look it up using their national insurance number if you've got permission. And that will tell you whether or not their license is valid and also how many points they've got on it. Very important for the insurance side of things as well, which no doubt will come on later. And there are common license scams out there. It's quite scary how many there are. Probably the one we see the most is what we call the lost license scam. So it's very simple. You have a driver who thinks he's going to lose his license through points, totting up, or lights a few drinks. So they tell the DVLA that they've actually lost their license. And the DVLA will then charge them and send them out a new driving license. So now they've got two. So at some point they discover they have lost their license, and off it goes down to Swansea, where they're going to look after it and keep it safe for them. And of course, they've now got that second license. So off they go and they try and get a job with it. And unless you do a license check, you could be holding the old license. Fortunately, if you do a license check, the number on the driving license and the number on the check sheet should all marry up. If they don't, you're being shown a fake. I know somebody that runs a driver's agency, and they reckon they see this one about twice a week, people trying to go past them. And then suddenly they've got a really urgent appointment when you say, oh, I'm just going to check this license with the DVLA. And they almost run out of the agency. There's more of this around than you imagine. So you've checked his license. Can he drive that vehicle? Now, again, we've got some other issues here. Those of us of advancing years and are in our 40s can drive different vehicles to those that pass their test after 1997 and are in their 30s. We have on our driving licenses B+E, which means that we can drive a van and a trailer up to 7.5 ton, and we can actually drive a little 7.5 ton truck. But if you passed your test after 1997, you only have a trailer up to 750 kilos. To visualize that, it's a sort of trailer you see behind cars going into tips on a Sunday. It's not a very big trailer. And anything bigger than that, you have to take another test for. And you also have to take another test if you want to drive a 7.5 tonner. Lots of people get caught out thinking you've got two drivers. You know, one can drive the van with the trailer. Why can't the other one? It all depends when he took his driving license. Now, obviously for the bigger stuff, what we call Class C, which is rigid vehicles up to 32 ton, and Class C+E, which is Arctics, which go to 44 ton and well beyond. Those you have to go off and take an extra test for and an extra driving lessons for, which is tremendous fun. So your license is right, your driver's right. Now we come to this other contentious little thing called an operator's license. If you operate any vehicles above 3.5 tons, so 3.5 ton is transit van size, and you need to have an operator's license, and you have to apply to the traffic commissioner to be granted that. And there's quite a legal process that you go through to get there. You don't need to use a tachograph until you're above that 3.5 ton limit. And there are some exemptions, but now I'd bore you to death to go through all of those different exemptions. There is, however, a little area around transit vans and trailers. Basically, if you hook a trailer on the back of the transit van and use it for business, you're moving into the area of operator licensing. And we're not only talking about transit vans here, pickup trucks, some Land Rovers, they're all in the area of operator licensing. Now, there's some exemptions based on the size of the trailer and what you're doing with it. So if you've got a pickup truck, a reasonable sized trailer, and you're a tree surgeon, then okay, you probably don't need operator licensing. But if you've got, say, a pickup truck and a trailer and you're moving cars for a car dealership, that's hire and reward. You're going to need both an operator's license and you're going to need a tachograph in that vehicle. So it's quite a grey area that you go through as to whether or not you need licensing for those size vehicles. Once you get into the 7.5 ton area and obviously bigger into the 32s and the 44s, that is almost certainly operator licensing, and you almost certainly need a tachograph. You will find that there are also various exemptions there. For some strange reason, if you're emptying cesspits, you don't need a tachograph. perhaps we'll not dwell on that one too much. So once we've sorted those things out, another thing to think about is company reputation. What does your vehicle say about you? Well, you've got the logo, you've got the phone number, you've got all those wonderful details down the side. Everybody now knows who you are. And you can bet that's going to turn up on the local news, because if that's a railway bridge, oh, whoopee. You're actually charged by Network Rail for the disruption. It runs at about £30,000 an hour for most of the bridges around here in Kent. But if you really hit the jackpot and get one, say, going into London Bridge Station, I believe that one is £120,000 an hour. And you pay that while somebody comes out and checks the bridge over and makes sure it's safe for the trains to proceed. So knowing the height of your vehicle can be quite important. But even down to simple things like that, where, you know, that's not perhaps parking, that's more throwing it at the space. It does say something about the type of people you have. So you need to think about your reputation and reputation of your business. I'm really, really pro cameras. I think they're great. They have multiple uses. The ones we all know about: protection against, you know, insurance claims and false insurance claims. Yeah, that's great. But they can also protect you and the drivers in a totally different way, particularly the ones that point in at the driver. Yes, they've been used to catch people that are using the mobile phone while they're driving. But also, we've had a recent case where, unfortunately, there's been a death. A cyclist was killed, and the camera protected the driver of the truck because it showed he'd looked in all his mirrors, he checked all around the vehicle before making the left turn. You could clearly see his indicator was going, it was flashing on the dashboard. And the cyclist, who was all dressed in dark clothing and with no lights on, just couldn't have been seen from the driver's seat of the truck. And the police completely exonerated that guy from any charges. So they have a lot of really good uses. You can go another step, and this is a company that actually monitors your driver behavior. They do a lot of work on the railways side as well, because working through the night, these guys are then whizzing around in vans and believe that the speed limits through little villages don't apply at 3 a.m. in the morning. So they're quite often finding drivers doing 60, 70 mile an hour through a village in a company liveried van at 3 a.m. And they call that driver up and ask him why he was doing it. Knowing they're being monitored does change people's behavior. And don't forget, you also have a responsibility. You know, there's recently been this health and safety case earlier on this year where the company was fined for not testing that their drivers were sufficiently rested. And on this occasion, they had 2 workmen leave their yard in Doncaster at 4:30 in the morning, went all the way up to Northumberland. They were welding all day. They then left to go back to Doncaster at 3 o'clock in the afternoon. And when they got back to the yard, they were asked, would you like to do another job? So they were offered this extra work. Off they went to do it down to Stevenage. And they got down at Stevenage at 10 o'clock at night and were working there until 20 to 4 in the morning when they left to come back to Doncaster. So they'd been on the road nearly 24 hours. Possibly the only sleep they're getting when they changed over in the passenger seat. And unfortunately at 5:30 in the morning, the one that was driving fell asleep at the wheel and they crashed into the central reservation on the A1. The company was found guilty because they hadn't made sure that the employees were sufficiently rested to carry out the work. Gone are the days when you can say, get in that van and go up the road. All you're doing is exposing yourself to risk which the health and safety experts can certainly pick up on here. So those are some of the things to think about if you're looking to branch out into company vehicles and operate company vehicles. It's not all doom and gloom. As long as you cover yourself and you made sure that the paperwork primarily is all in line, then you should be able to safely operate. So very quickly, just as I wrap up, who on earth are Plumwood? Well, we look after a lot of that paperwork. We've tried to find a different description for us, but we're really just professional naggers. We make sure that you've got all that paperwork on licenses and everything all in order. And we kind of like gather you up in our arms and make sure you're doing it properly and slap you around a little bit if you don't. But at the end of the day, we just really want to look after you and keep you out of trouble. And that's what our business is based on. So that's really keeping you out of trouble. I suppose now if I'm going to pass over to Ricky Draper, and Ricky's going to talk to you about what happens when you get into trouble. Ricky.
Thanks very much. Very much appreciated there, buddy. Quite a few times we have actually on my part of the presentation and part of the webinar, as you'll see as we go through. So mine's basically dealing with how to manage your risk, save money on your fleet and HGV insurance. UK insurance industry is currently experiencing hard market conditions. In a hard market, there is less desire for growth and more of a desire for stricter terms and increased premiums to try and reverse the downward trend seen in the soft market. Therefore, we believe it's time for business leaders to take a step back, reassess how they view and manage risk within their company. Insurers, they're in the business of risk, but given the rapid hardening of premium terms, businesses with strong risk management and a track record of low claim activity should be the ones that avoid some of these increases. There are a number of ways by which business leaders and fleet managers can reduce the risk of their fleet to insurers and in turn reduce their insurance premiums. The size of your fleet and the vehicles in it will probably vary greatly, and as such, not all the following ideas may be applicable to you guys, but I do feel that they can be modified to fit any kind of fleet. Driver recruitment, I know Gary spoke a little bit about this earlier, and I'll sort of elaborate a tiny bit, but when a potential driver walks through your door, you know nothing about them. As such, your check should go much deeper than just a DVLA license check. The best firms that I've worked with have a stringent induction process, including theory, such as watching maybe a presentation on accident procedures, a practical test, some even do an eye test, and a driving license check. And whilst I understand that some of those will probably be a little bit sort of much for those of you that run small fleets, it's still worth incorporating a driving license check, some theory, and I also very much encourage a day or two in the vehicle with a more experienced member of the team or the fleet manager. Driver handbooks and road safety policy. These really help get the company's message across to the drivers and reinforces what's expected of their driver in terms of performance, attitude on the road, and safety of the vehicle. It's no coincidence that the firms with the best loss ratios and subsequently cheapest premiums are those that take the time to get their point of view from management all the way down through the firm. Driver training. This is something that's often overlooked by businesses with small fleets and or small vehicles, whilst those that run HGVs, and Gary certainly will know about this, will already know all about the importance of CPC training and the like for their drivers. There are many products in the UK market for driver training, and a number of insurers are actually now offering add-ons of driver training on their fleet policies. Another one that Gary mentioned, telematic systems. There are a multitude of offerings out there at the moment, and the companies that are being proactive and fitting these to their vehicles are seeing the benefits and seeing them quite quickly. These systems often have a suite of reports that the fleet manager can access, with the most important being the safety analytical data. This includes speeding, locations, harsh braking, idling. This information is then used to compile driver scores, rating each driver out of 100. The firms that I've worked with often set a target of around 97. If drivers fall below that, they're brought in for discussion on how this has happened and what can be done to improve. Incentive schemes, following on from the telematic systems and the scores they can provide. Firms can decide to run monthly or quarterly competitions for the best driver, with the winner receiving a meal, shopping voucher, or the like. Also, the other end of the scale, you can have penalty schemes whereby repeat offenders have to pay for the policy excess if the accident they were involved in was caused through their negligence. You may find that drivers, once it hits them in the pocket, take a lot more care of your vehicle and therefore your insurance premium going forward. Camera systems, another time with Gary here, we've got quite a bit of a link here. But as you know, dash cams are becoming very popular with everyday motorists. And along with telematic systems, are the easiest and quickest, although definitely not the cheapest way of improving a fleet's performance. There are many benefits of fitting a camera to your vehicle. Some of these include crash for cash scams. These currently cost the insurance industry around £350 million a year. And this inevitably pushes up prices for everyone. The main way of creating a scam crash is by braking suddenly and without warning. The driver behind is then unable to stop quickly enough and slams into the rear of the offending vehicle. By fitting front-facing cameras, this kind of erratic behaviour becomes apparent, and many investigations have concluded that crashes have been scams based on this evidence alone. So recordings act as proof for accident claims. Typically, claims rely on eyewitness statements and can be a long, drawn-out process. I'm sure many of you have been through that at one point, whether it's for your business or your personal insurance. Using a dash cam can categorically prove how something happened and whether your driver was at fault or not. Dash cams can also be particularly handy if your vehicle was in an accident and the other driver didn't leave a contact name or number, as you can check the recordings to take the third-party registration number. The insurance company can then see who that vehicle belongs to and insured by, and can take the claim forward from there. Record and report dangerous driving. If the dash cam is always recording, then you can be sure that it will have caught the dangerous and erratic driving of the car that sped past one of your vans or trucks earlier in the day. This footage can then be passed to the relevant authorities, and this helps make the road safer for your fleet and others, and also reduces the risk of an expensive accident. Some other simple ways of saving money on your fleet and HGV insurance. Shop around each year. Sounds simple, but many don't do it. I wouldn't believe the amount of clients that come to me and have been with their broker for 5 or 6 years and never looked around. It never ceases to amaze me. And you can achieve this either by going to the market yourself and approaching a couple of other brokers, or to ask your current broker to approach their panel of insurers and to give you a full market report at the end of each exercise. Increase your excess. If you've incurred some fault claims that result in damage to your vehicle, and as such means you've paid your policy excess, increasing that excess in subsequent years can have a positive impact on your premium. Reporting claims quickly. This is something that, again, many people don't quite understand the importance of. And many clients, until I actually inform them, don't realise just how important it is to report your claim as quickly as possible. Some insurers are now offering 50% reductions in your policy excess if you report your claim in the first 24 hours. And with some fleet and truck policies, you can have excess of up to £2,000. There can be some big savings by getting that report in straight away. Allianz Insurance recently informed me that in a standard claim in which their policyholder hits a third party in the rear, claims costs will quadruple if the claim is reported on day 30 compared to being reported on day 1. Reasons for this cost increase include larger car hire costs for both parties, failure of your insurer to get their vehicle into your approved repair network, and failure of your insurer to access their own rehab specialists if injury has been caused. I really encourage my clients to use bump cards in all of their vehicles, so their drivers can then obtain all of the required information as quickly as possible and relay it all back to the office by picture message within minutes of the incident happening. The office can then report to the insurer, the claim's up and running. It makes a big difference. Finally, you can increase the age of the firm's driver profile and policy driving restriction. Most HGV and fleet policies offer driving restrictions ranging from any driver over 17 to any driver over 21 to any driver over 25. That's the most common. But you're now finding many insurers will actually increase in the driving restriction to any driver over 30 and offering further discounts should you do so. Too many young drivers on your fleet will cost you more at inception of the policy and in subsequent years when the claims definitely start rolling in. I've tried to run through that as quick as possible. Probably not a great amount of time to talk about insurance and all the way you can save money. But I'm now going to pass you over to Josh, who's taking the role of Emma for the next section of the webinar. So yeah, thanks very much. And I will pass you over there.
Thank you very much, Ricky. That's really useful. Some interesting stuff there, and well done for firing through so much content. I do encourage anyone who needs to talk about this to get in contact with Ricky. He's put his details in the chat window there. get in touch with Broadshaw. They're brilliant. So yeah, I'm sorry, it's me. So we'll get rid of Emma's picture, and I'm afraid you're stuck with me, as Emma's not been able to join us. So I just wanted to run through a couple of bits. So obviously insurance, the big thing that insurance does is it protects your cash flow if a problem arises. So if an accident happens, your insurance stops you from having a massive cash flow dent to cover that issue. But of course, there are other issues that could arise and affect your cash flow. So I just wanted to show you the 5-minute cash flow tool that we give out for free. So if you go to the A4G website there, you can download this for free on there, or contact one of us and we can share this with you. But effectively, I've broken this down into parts to show what it does. So what we're trying to do is, rather than giving a forecast of this is what our sales will be in a month or 12 months time and projecting it there, because all cash flow forecasts are usually a bit like that. And that's not very useful practically for you as a business owner. So what this tries to do is it first of all starts with, what funds do you have available? So in the calculator, we put in the amount of cash that you currently have in your bank account. So let's say, for example, you've got 35,000 in your current account, 5,000 in a deposit account. So you've got available funds of 40,000. Add to that any available overdraft that you may have. So £10,000 pre-arranged overdraft. That means your business effectively has £50,000 of cash to use for its working capital. So then the other side of that is to say, okay, if we've got 50,000, what do we need to keep that aside for? And this is where, usually if you look at your management information, you will look at the profit and loss, because that's telling you, are you making money or are you not making money? But what that doesn't tell you is, do you have cash available? Because you might be making the best sales months you've ever had, but if those customers don't pay you for another 2 or 3 months, you're not going to have the cash, but you may be incurring costs to fulfill those sales. So looking at the other side of the cash flow tool, we then start to add in the cash flows that we can predict. So your tax bill might be due in, say, 6 months' time, and it hits you every 12 months. You've got a VAT bill coming up, it's going to hit you every 3 months. Oh, that's going to be due next month. So we put that in. So in this table here, you can see that we've got 40,000 tax bill. Then we've got an interval of 12 months, because that's how often the tax bill arises. And then you've got 6 months to go until you need to pay it. So it's therefore doing an apportionment, saying, right, of that 40,000, you really need to have 20,000 in your bank account already. Now, some people actually take this a step further. If you're very prudent with your cash flow, then you'd obviously be saying, well, actually, the second that year ends, I want that cash locked away. And I would always strongly advise that, but it's not always the most practical thing to be able to do. And given the craziness of this year, I know that many businesses are having to look to every place they can to get their cash flow ticking over. So this is what that allows you to do. It says, well, actually, it gives you another 6 months to save up the rest of that tax bill. And then it goes through, and we've included if you pay your insurance premiums annually, for example. And you can put anything that you can see in on your radar in here. So if you've got something needs to go out in 2 months' time, 3 months' time, you can start plugging it into this calculator. And then what it does is compares everything together and then predicts where you are with your cash flow. So if, for example, that comes down to an answer where your outgoings are higher than your cash resources. So if we said that you've got cash available of 50,000, but you've got 86,000 pounds of liabilities going at that you need to have saved up according to that, then all of a sudden you've got a shortfall that you need to answer. That might mean you have an urgent situation. You need to cut some overheads. You need to extend some payment terms. You might need to talk to the bank, say, actually, can I extend my overdraft? I need to pay this in X amount of time. Once that's cleared, I can then pay it back. And it gives you an early warning rather than waiting for your bank account to drop to that scary point. It allows you to identify early and take action before the action forces you to do something you don't want to do. So the 5-minute cash flow is a tool that we use we recommend any business runs the 5-minute cash flow before they take their drawings each month, because that allows you to know the security of your business. Or if you want to take a bonus payment, or you want to issue staff with say a Christmas bonus, then having a look at your 5-minute cash flow is step one of that process. And that actually then ties into your balance sheet, because your balance sheet is what gives you all the information about, okay, how much corporation tax am I going to have to pay? How much VAT have I got due? How much are my trade debtors? How much are my trade creditors? Things like that. And, you know, ultimately it tells you what your true cash flow position is, because it might show you transactions coming into the bank that haven't yet appeared on your bank statement. So if the key for that calculation is your financial information, then now is a good time to start looking at how you can streamline and simplify your recording of your financial information. You could look at doing things like online invoicing, linking online payment methods to invoices, and automate your debt collection. All of this allows you to streamline processes so that the operations of your business can be your focus, and the bookkeeping side, the financial administration behind it, you can then start to get into some controlled fashion. And you may find that you've got staff who spend a long time trying to marry up payments to invoices. If you can move to an online payment system where they are automatically married up, you can suddenly find a lot of much more useful things for that staff member to do, like preparing your 5-minute cash flow. So there are lots of options out there at the moment. We live in a wonderful time in technology to help us find it less of a chore. And I've got some clients who have traditionally always found it a chore to do their bookkeeping, but then when you've put them together with the right software, they've actually said it becomes a joy. And we've got some clients where they hated the idea of management accounts. They never looked at them. And now a day after their month end, they're demanding, right, when can I get my management accounts? I want to know how I've done. I compare management accounts to a bit like when you go for a run and you might track your run with a Fitbit or with Track My Run or Strava or something like that. You can see a route that you've run, how fast you've run, compare yourself. Next time you go, you can see if you're doing any better. Well, I actually think that then filters over into the financial world. So there's a package called Fluidly, for example, that we've worked quite closely with, where they can package up a lot of things to be very powerful for your business. They can automate chasing of debtors. So if you've got invoices outstanding, you can say, well, after 30 days, send them a chase email. After 60 days, send them a slightly stronger chase email, and then highlight the ones that go beyond that so that I can get one of my credit control team to actually talk to them. It can also give you to-do list functions. It can take information when someone promises to pay. It will then log that and then filter that into a cash flow so that it will let you predict, okay, I will probably have this much cash coming in 2 weeks' time because that's what I've been promised. And it also then filters into the debt collection. And what it actually then builds up is it can give you a projected cash flow built on actual patterns of your business. As an accountant, whenever someone asks us to do a cash flow and we do it manually, it's a very complicated job. As I said, cash flows are a little bit like that, but when using Fluidly, it takes away some of the unknowns. It gives you a lot more control and you can understand where the data is coming from. Obviously, tomorrow can always be very different to yesterday, certainly right now, but it at least gives you a starting point. And often a plan, even when it changes all the time, is better than having no plan at all. There are other little applications you can add to your bookkeeping these days. Receipt Bank is something that's very popular at the moment, where you can automate invoice collection, and it has a whole raft of tools that you can add to it now to help simplify your record keeping, and it can actually get you away from needing to store all those paper records in your loft. Approval Max also allows you to share documents between people that say you've got an invoice coming in, you need a manager to approve it, and then you need your bookkeeper to pay it. Well, Approval Max, you get someone to just scan it into that, and it can then go through the various people who need to approve it, so that it then ends up getting paid. And you can do it on your phone. It's really good. We use it all the time, and it's an absolute lifeline for us, certainly now that we're all remote working. So yeah, so overall, it's a good time to start looking at your financial reporting and make sure that they make sense to you. So they've got all those tools there, but then getting the reports out the other end. As I said, using your balance sheet is a really important thing, because that then filters into how you predict your cash flows, because it shows you what you owe other people and what other people owe you. But you can also use other things. You can use reporting by different areas of your business. You might want to have a look at different salespeople and how much sales they're generating. You might want to have a look at it per product or service that you have to work out the profitability. And as I said earlier, we looked at the gross profit. Knowing the gross profit on each product range or service range can be really important, and you can use your software to give you that information. You've got to balance the complexity of getting the information in with the reward of what that information then allows you to do. But there's usually a lot of power in having some data of that level. The other thing you can do is compare month-on-month figures, compare actuals to budgets. So if you're using your break-even calculations and you've got your average daily takings we talked about, you can then set that as a budget. Are we meeting that budget? And that can then filter through to decisions you need to make on if your business is actually supplying the profits you need to pay everyone and ultimately pay you as the business owner, because we're not in business for fun. We do need to make a living out of it. My favorite report is the prior year report. I always think it's very easy to compare this month to last month and say it's better or it's worse. But actually, if you compare this month to the same month last year, you have less excuses. You're comparing like for like, unless you're in lockdown in one and not in lockdown in the other. But even then, it gives you a good basis of comparison to see how you're doing. So a prior year report, we've got a report that we put into a package called Zero. Sage comes with a report inbuilt, which allows you to do this. And it's a very powerful report to use for your analysis. And then you've also got things like project costing and job costing versus the actuals. So you can work out if a project is going over or under. And the earlier you do that assessment, the easier it is to have the conversation with your end customer to say, actually, this is costing a lot more. We might have had role creep, responsibility creep, spec creep, and that's all causing a problem with the actual profit on the job. And you can have the discussion before it's too late. So yes, so that all adds into cash flow planning, and you can then use good information to forecast where things are going. The final thing I just want to touch on is, as we go into a lockdown again, there are two ways a business can react. It can retract and hunker down, cut loads of costs and just sit there in the bunker, or it can start to look at marketing and say, right, actually, I need to use this time to drum up as much interest in my business as possible. And there are three ways you can do it. We've got inbound, outbound, and referral is what we generally break it down into. Inbound is how people find you. So you're looking at how your website appears, your search engine optimization. If you, in the old days, you would list yourself on the yellow pages, things like that. Taking part in a local publication if you want local business. It's how people find you, and what do they find when they find you? Look through the customer's eyes at those things. Outbound is how you then go out and get business. If you've got a database that you can then contact, mail shots, telemarketing, campaign-led items to go and try and drum up interest specifically at targeted markets. And then finally, the referral marketing, which is the one that most people do naturally, which is make sure you're encouraging people to refer you on, do good work for people, tell people that you're looking for more business, and they will in turn say, oh, this person did a really good job for me, you should go and speak to them. That's how, we've got to know our sponsors for this webinar, and doing networking. Obviously, networking in the traditional sense has become much more difficult, but it's still going on and there's ways to do it. And that's usually the best way of starting out in your marketing. So I've cut that quite short to make sure that I don't overrun, and I'm sorry that it wasn't delivered by Emma, but I'm now going to pass over to Peter, who's going to talk to us about grant funding. Over to you, Peter.
Thank you, Josh. That's been a very useful talk. What I'd like to talk about is grant funding. Now, we've heard earlier from Gary and Ricky about a lot of systems that are needed when you've got logistics business, where you have to keep records, and how those records help to minimise costs and lay off risks. And obviously, with those types of business, also you've got all the products that you're moving around, the pallets and what have you, you need to keep the records of. To actually do that effectively, you're probably thinking now about how you might invest in some software or some systems and training for the staff as to how to do that. And the cost is obviously going to be of a concern to you, because investment is always going to be a draw on the cash flow. What I'm going to talk about is what's known as the tail grant. Now, this is a form of grant funding specifically for transport and logistics businesses, or businesses that move materials from A to B. It's a grant funding that's around growth and efficiencies, which is actually quite different to the grants that Josh was talking about that are COVID related. Now, the grant fund at the moment is actually one that's been running for a couple of years and is due to end in March next year, 2021. There's about £400,000 remaining in the pot, and they're doing a reconciliation at the moment to see who's spent or not spent the money that was allocated to them. So quite possibly there will be some more money around and it'll be extended, but at the moment it's running till March 2021. It's a match funded grant, so the match funding is 40%. So what that means is if you spend X amount of money, you'll get 40% back, which obviously helps with the investment. It can be used for things like capital investment, revenue, software, and consultancy. Consultancy can be the selection of doing a piece of consultancy work to, say, select the appropriate bit of software that you might need for doing something. And then you can have a separate project for that implementation. The capital spend can be to do with, say, cameras in the vehicles or dash cams, all of which prove really useful as we heard earlier on. Now, at the moment, there's two types of grant. It's sort of split into two. There's what they call tail light, which is for the lower spending types of grant claim. And this can be quite simple things like sorting out cyber security and having some of the standard software made available to the business if you haven't already got it. And then there's the larger grant, which can be up to £10,000 if you're spending 25, that's 40%, 25. If you wanted to do a project that leads to new activities or services being offered. The way it works is that the grant people do a diagnostics on your business, looking at several areas. If they approve it, then you can then go out, get some quotes for the work. The quotes are submitted. You have the work carried out. You then pay for the work, and the grant money comes back. The timescales are that you've got to prove that you've paid for that work before the grant money comes back. But because of the end of the grant programme in March next year, you really need to crack on now, really, with making a grant application. So if you've got some sort of idea of what you think you might want to claim for as an investment, then by all means give me a call, and I'll run through it with you and then put you in touch with the appropriate grant people. So that's my part on grants. I hope you found that useful. I'm now going to pass over to Josh, who's going to run through the questions that have been taken. So thanks, Josh.
Perfect. Thank you very much. That was, it's always good to know that there's some money out there available if people need it. So can I ask all the panelists now to turn your videos and microphones on, and we'll go through some questions. I realise that we're quite tight on time, but the last thing to mention is that if you want more information on updates as they come out about the coronavirus support from government, or any of our insights into different tools that might help you in your business, if you Google A4G Coronavirus Hub, we appear as the top item, takes you to our Coronavirus Hub. Please go there. We also send out updates weekly, sometimes more often. We're going to send one out tonight about the furlough extension. If you want to be involved in those, then you can apply on the website or drop an email to discovery@a4g-llp.co.uk and we can help you. So without much further ado, let's go through questions. I can see some questions have appeared in the Q&A box. So I think the first one here is for Gary. It says, what if a driver won't let me check his license?
Well, I think the first question you've got to have is why. And I would imagine what's he got to hide? I wouldn't take a driver on that wouldn't let you check his license. it's how much risk you want to expose yourself to, you know, because you're going to be standing right next to him in court when it turns out he hasn't got a license, and if there's an accident that results of that, you could be best friends for 4 or 5 years sharing the same cell. Excuse me. Yeah, I wouldn't take anybody on that wouldn't let you check his license, full stop.
Wise advice.
Sorry to jump in, Josh. From a broker's point of view as well, I mean, we certainly would the same thing, Gary. We'd encourage our clients to never take a driver on that would not show you his license. Most policies have some kind of restriction on terms on how long you've had the license, how many points you can have on that license. And yeah, if someone doesn't want to show you it, as Gary says, as a broker, we certainly wouldn't encourage that client to employ that partner at all. So yeah, just back what Gary says there. Yeah.
Thank you very much, Ricky. We've got another question here. This one is for Peter. Who can apply for a grant?
Essentially, it's anybody that moves goods from A to B. So it can range from freight forwarders, hauliers, people in manufacturing, engineering, distribution. I'm actually applying for a grant at the moment for a construction company that's got a large beta van that they use for maintenance repairs all over London. So anybody that moves things from A to B.
So does that include if it's internal? So if you've got 2 sites inside your business and you're moving it from site A to site B, does that cater for it too?
If you've a number of vehicles that are doing that, that would cover it, yes.
Fab. Okay, that's really interesting to know.
Yeah.
Thank you, Peter. And then as a final question here, looks like, well, there's a couple of questions, but I'm going to stick to just one more. Probably one for me. I was thinking of making redundancies. Should I delay this decision now that we have furlough available? It's a difficult one because obviously redundancies are a very tricky subject, and you don't want to make the wrong decision. You don't want to make someone redundant that then you find that post-lockdown, post-furlough, you've got the capacity within your business to keep them employed. You don't want to lose good staff now to have to re-recruit later. But on the other side of things, you need to take a realistic view of where things will be in the next 12 months and whether your business can sustain its current staff base. It sounds cynical, but the thing that the furlough scheme is quite useful for is you can make staff redundant whilst they're on furlough. You have to top their pay up whilst they're on their notice period, but the furlough grant will effectively subsidise the cost of that. So it can be quite a useful tool if you have to make that horrible decision. We saw a big wave of redundancies at the beginning of September because people were suddenly realizing actually the maximum amount of time someone has on notice is 12 weeks. If we make redundancies at the beginning of September, then they'll be covered completely by the furlough scheme during that redundancy period. You still have a redundancy cost at the end, though, that your business has to sustain. So it does subsidize it a little bit. And I would say that if you need to make those big decisions, then you should be reviewing and making those decisions now, or at least coming up with a range of options, knowing when they apply as for how far the furlough scheme will take your business or how far a recovery can be seen. So I hope that helps answer that question. So I think that is probably about all we've got time for. Thank you very much for everyone who's been listening. I hope that it's been useful. And thank you very much to our panelists here. Thank you very much, Peter, Gary, and Ricky. I really appreciate your input for this webinar. And thank you again to our sponsors, Sanford Hodges, Interpro Solutions, and Express Van Centre. Hope that's been useful. Thank you very much, everyone.
Thank you. Bye for now.
Bye.